G'day traders, Stacey Burke from Stacey Burke Trading. Welcome back. It's been a month and a lot of people have emailed me. Today we're going to be diving into one of the most common questions that I was asked and emailed almost on a daily basis. How am I trading gold and where have I been? Let's get started and get right into it.
But before we get into that, what I need you to do is hit the like button. That helps the YouTube algorithm help us keep sending out the videos to more new subscribers and hopefully keep improving our content to help traders getting better every single day. We had a 3-day lockdown in Perth, which I know for a lot of people wasn't a big deal as they're already under lockdown, but for us that was a pretty intense sort of claustrophobic few days. We had a week of bushfires in the north and in the south that still continue to fester in some areas, and massive flooding in the northwest part of the state.
So thank you everybody for all the concern and questions. It's been a really interesting month. 3 kids been home. We've had fires, lockdowns, floods, but as usual the markets keep trading every single day, and today we're going to talk about one of the things that I have pretty much minimized everything down to, and that is just trading the opens on the gold market. Now, as many of you know, the last 6 months I switched over from the British pound crosses primarily to gold, and I know there's a lot of people out there who are trading Bitcoin, they're trading GameStop, they're trading the US equities, oil, all the different opportunities. Today I'm going to be just going into what I'm doing on a daily basis. What I found with gold is that it moves very consistently and specifically based on time and price. Day in and day out, Asia, London, New York, depending on where we're at with day 1, day 2, day 3, the opportunities can be 25, 50 pips or more, in excess of 100, maybe 200 pips on gold. And those trades tend to be very fast and quick when they happen. So you may be in the market for as little as 2 or 3 minutes or a minute, as we saw last week on the London Open, a 1-minute trade for 50 pips. It actually moved further than that, but traders who had a preset target would have been taken out with 50 pips. They're very quick and very specific. Now, a little disclaimer, this isn't going to be for everybody. I have tweaked my strategy somewhat. There's going to be people who don't like it. There's going to be people who do like it. My encouragement to you is to take what you can from what I have to offer and use it to improve your own trading. Now, I'm just telling you what I do on a daily basis. It works. I'm very consistent, and the opportunities are there every single day in gold. Now, some of this may transfer into other markets. You'll have to do that research yourself. Gold has been very, very buoyant in terms of the opportunities that it has presented us. We're in an amazing markets globally and tons of opportunities, but I'm going to be going into what I do on a daily basis to keep my trading down to an hour, give or take, 15 minutes, half an hour. But it's about the trade itself. Once I am in the market, these trades move very quickly and fast. There's very little, if any, heat against your entry position, which is a great confirmation and confidence that you're in the right direction. Now, also, for you traders who aren't doing this or who are looking at gold, I encourage you to be doing this on a demo account or just to study the markets. I'm not an expert in terms of telling you how to trade your money, so don't lose money. Learn first, watch the market. Looking at a dry chart after the fact is one thing, but doing it in live time and seeing the speed and momentum of some of these price candles, how it will turn in the last 2 or 3 seconds or even in 1 second in reverse, especially at a critical moment in terms of the timing at the market opens or into that 15-30 minutes of the first 12 candle window. So there's plenty of opportunities. Gold, even on a quiet day, will still move 150 pips. I know a lot of traders have messaged me and they find that gold is too volatile. One of the reasons I like gold is because it moves. People are jumping onto Bitcoin because it's moving and it's going up, or they're chasing GameStop because it's moving and it's going up. Gold moves every single day. The types of trades that I'm targeting are trades that I can minimize my downside on. They're very easy to identify. They're based on timing, but also I can scale them up in size. So if you can make 25 pips or 50 pips, Whether that's $5, $50, $500, you can turn that into $5,000, $50,000, maybe $500,000. So the opportunities are there. It's a massive, massive market. Let's take a look at some basic ideas and put them together, and then we'll look at the charts. So again, our 12 candle window, we talk about the timing window, and some of these strategies do apply on the other major pairs. The pound crosses the euro at specific times and setups, round numbers, high and low of the day. But the reason I like gold is because when the pound might move 25, gold might move 75. And again, it's important. Some days they're going to see big moves in other pairs, but I've specialized in trading the gold, and it's an opportunity for me that shows up every single session without a hitch. I've been following these on a daily basis for 6 months without a hiccup. There is a trade in every single session. Pound also, again in London, will give those opportunities. But again, coming back to our timing window, Asia, 8 to 11 p.m., London, 2 to 5 a.m., New York, 8 to 11 a.m. Now, my main focus will often be the middle 1 hour, especially in London and New York. New York specifically, 9:30 New York Eastern Standard Time a.m. and that is when the equity markets open. And if you've been following gold, you will notice that in a majority of the cases, once the equity markets open, they'll often take traders further into the extreme, trapping them or hitting stops in both directions before reversing the market. Now, we do have the odd day, as we did yesterday, where it's an all-in trend day, and we're going to talk about that with the weekly cycle, day 0, day 1, day 2, and day 3. But the timing window is critical. The next thing we'll be going into is understanding the 15-minute rotations on that 1-minute chart. When you look at your 15-minute charts, you look at your own, you'll see a 15-minute bar moving one direction and the next bar moves exactly back the other way. Now in gold, often that opportunity exists when we see a false move at the end of a session and the beginning of a session. That 1 bar reversal on a 15-minute chart can be 25 pips straight away and maybe a 50 pip move if it's a stop hunt in the opening of a session. So again, there's basically 3 types of trade setups that we will be targeting. We're going to be looking at trend trades, reversal trades, and range bound trades. The next thing we'll be going into depth with is understanding which trade opportunities offer you the biggest risk reward setups, and also the ones that are largely scalable for increasing size on for maybe a 10 to 1 risk reward, and in some cases greater, especially if we see a reversal trade from the high to the low, not only of the day, but maybe for the week. Really important to understand. The weekly cycle, day 0, we talked about narrow range days where the market consolidates, putting a peak in, and largely trades sideways. This is a great indication of a market that is potentially now going to be either trading out of that for a measured move in either direction, but this will often happen at the transition of a week from a Friday, Monday, Tuesday, for a continuation of a weekly range or a reversal of a weekly range. New York Eastern Standard Time. If you don't know what those times are, you need to go and Google them. These are the only times that I am looking at trading. We're going to talk about the gap times later and specifically identifying trade opportunities. Now, those trade opportunities are situations where the electronic market maker, the algorithm, will kick in at certain times, and there's easy ways to identify that, not only with where you're at in terms of the high and low of the day, but also specifically in respect to the timing cycle, and also the distance potentially that reversal may run prior to the open of the next session. Now again, for those of you who've been following gold, you've seen some massive moves on those charts. Now going back and looking at the daily ranges, some of those big moves have occurred on days that didn't actually even move that far. So again, I'll reinforce that the opportunities are massive on the gold market. Now, just getting in a bit deeper, just want to reinforce this may not be for everybody, but I'm talking about having stress-free trading. So I'm talking about coming to the screen at very specific times, knowing that there's going to be a trade, knowing that what I'm looking for is very specific, knowing if I'm looking for a trend trade, a reversal trade, or if I'm in a range-bound market. That allows me to determine what my conviction is on those trade setups in terms of the risk that I'm prepared to take. If it's a low risk opportunity, I'm going to trade smaller. If it's a medium opportunity, maybe 50 to 100 pips, I'm going to be prepared to put a bit more size on. And if it's a trend trade or a large range reversal opportunity for a high to low or low to high reversal from high of the day, low of the day opportunity, I'm prepared to potentially position myself with risk on that as well. Now I'm using 1 minute charts. Once we start the session, I'm using my levels. I'm looking at the 15-minute chart, but I'm using my 1 minute chart to confirm or negate whether or not I'm going to participate in that trade opportunity. Now there's a lot of variables in terms of how these trade opportunities will present, and again coming back to where we're at in the weekly cycle. There is not a cookie cutter approach. This is a skill that you'll need to develop, but if you start to incorporate all the little steps, and again, we're just fine-tuning things down from what we've done previous with our 12 candle window down to the 1 minute chart to minimize being in the wrong direction, but to maximize our opportunities to be in and out of the market quickly, capturing pre-programmed targets, and in some cases potentially having multiple positions, perhaps where you're taking profits off along the way and allowing a trailer to capture a larger move if you want to scale into and out of a trade. These trades will often be very quick. Trend trades sometimes will continue to move, as opposed to a reversal trade, which will often be a stop hunt and a very fast aggressive move. These, again, depending on where we're at, we may have in Asia a 25 pip move as the day starts to evolve. So our range may be 50 pips. There may be some pre-market opportunities. For the bulk of what we're going to focus on, I'm going to stick to a really basic squeeze setup. That's the safest, best opportunities for most traders, and then we'll build on that so that the other opportunities that traders can profit from, because often there'll be a move into the open and a move after the open for trades in both directions, or to continue with a one-directional trade. But these trades can offer 25, 50 in London or more, and then of course 50 plus if we're talking a large range day or a reversal trade setup. Pre-programmed profit targets and stops. Stops can be as tight as 12 pips, some cases 15, and in other situations on a large range move, maybe a bit more, but often on the 1 minute chart, we can keep those around that 15 pip target. I've kept track of all my trades and tried to keep my maximum stop loss to 15 pips. So we're going to look at the charts. I have incorporated a couple of other indicators on the charts to simplify the visual recognition of these opportunities, and also to help identify where we're at in a weekly cycle, day 1, day 2, day 3, in terms of staying on side of the bias that I see in the market, or that you can protect yourself with in the market. These are the things that I use to just keep things so simple that I can walk up to the screen and know, is this a high probability opportunity, medium or low opportunity, low probability opportunity, which then the next thing comes back to is that, well, if I don't see that set up now, perhaps this is a second hour trade or a third hour trade if the market continues to extend out in that second hour. And then of course we'll talk later about gap time trades. So let's get into it. We'll take a look at some basic setups on the charts from the last few days and last week on gold. And again, thank you for a ton of concerned emails, questions, comments. All the feedback has been tremendous. Everything's been great in Perth. We've just I've had a very, very busy month. 3 kids home from school holidays for 6-7 weeks. We had a week of lockdown. We had fires. We had masks. The whole thing. So it's just been more of an opportunity to take a break, but also to help streamline my content in order to help the traders that are serious about taking things to the next level. So there's a couple of ways to look at this. If this is too in-depth for a lot of traders, this isn't the channel for you. I keep things as simple and straightforward as possible, but it's about trading opportunities that you can scale up in size, but it's a skill that you also need to develop in live time, and also understand that there are a lot of manipulation tactics that will play against you, done by the smart money. flashing a price, the speed of candle movement and reversals, even right down to the last second in a 15-minute cycle. Trapping traders in the wrong direction and moving very quickly and aggressively back in the other direction. Gold is incredible for the amount of tactics that you will see, but when you step back and you see the big picture for what you're looking at evolving and setting up, and then positioning yourself in there, identifying where your risk is controlled at, setting your profit target, knowing if you're in a potential measured move for a bigger trade setup, not getting in front of a freight train, but just allowing the market is going to give you tons of opportunities. So let's take a look at the charts. Again, thank you. Keep your trading super simple, and hopefully everybody's had a great month. Good Christmas, good happy holidays. We're heading into February. We've had Bitcoin at record levels this morning. Elon Musk put $1.5 billion in place. We've had crazy activity in equities in the US, massive moves. So again, this year, this month, this week, we're probably going to see some incredible opportunities to help change your trading, your future. Keep it simple. Stay disciplined, stay focused. Let's have a great trading session, and may the markets go with you.
Now, we're going to be talking very similar to what we did before in terms of the 12-candle window and the prime time for hitting these trades and being in the market for the shortest amount of time, but maximizing our opportunities. Now, I know there's going to be a lot of traders who are going to disagree with what I'm going to talk about, or they don't like what I'm going to talk about, but I'm going to talk about what I do each and every day to take 50, 100 or more pips out of the market with as very little stress as possible, and then how some of those opportunities are also scalable in size. Now, previously, you've not seen me have any other types of indicators on my charts, but part of the reason that I've put these on here, the 50 and the 200 moving average on the 15-minute chart, is to help traders identify the bias heading into not only the week, but we talk about day zero. We talk about the opportunities at the end of every single week in terms of the next week's cycle. But also then we talk about the weekly template, the day zero scenario. So we have a Friday, Monday. We have the opportunities in each session. So an example of where we will see Asia and London expand throughout the day, and New York can offer some massive opportunities, not only in the pre-market, but also in the opening of the equities hour. Now, part of putting these levels on here is for traders to help have a visual bias immediately in terms of the bigger cycle. So not only we have a Monday, Tuesday, we get our day 1, day 2, day 3, and then our reversal day on Friday for a new weekly reversal, level 1, day 1, level 2, day 2. And one of these opportunities help us now see the opportunity for a trend trade, a reversal trade, or a range-bound market. We're then going to go in depth on the 1 minute and ways to filter out getting caught into poor quality setups, but also then identifying in the timing window and the price levels at round numbers, the opportunities for fast, aggressive moves for 25, 50, 75 pips immediately into the open of a session. And then being out of the market, not getting caught into sitting on a trade, nursing it for hours on end, but being prepared to enter in, whether that's London, Asia, New York, to position ourselves into a squeeze for a fast bullet-like move, which can be a stop hunt or a blow-off in a trend trade, or we may see a reversal trade coming into the next session, coming back to get traders who are in the money from the previous session, whether that be Asia, London, New York. And again, understanding the concepts of where the market will move in 25 to 50 pip increments, not always exceeding or going past the higher low, but these opportunities where the market will hit the stops, and potentially trend. And these moves can be 50, 75 pips. And again, as we see on London yesterday, when they move quickly and they're fast and over, and traders have very little heat into their position, but also understanding that the equity market opens can be fantastic opportunities, not only in the Asian, London, London and New York, but ways to identify those in the Asian session as well. New York can offer us some just massive opportunities. Last night we saw a continuation move in the pre-market where the market made a stop hunt back into the trend, jamming traders into the 50. We're going to talk a bit more in the coming videos about the moving averages on the 1 minute, how I use them to protect myself, again, getting caught into poor quality trades, not getting caught chasing moves and getting caught up high or caught down low before the market shifts. But again, being able to position yourself in squeezes, in opportunities where the market coils to make either continuation moves or explosive reversals or blow-offs where you are out of the market or out of, you're not at risk because you're at break even at that point very quickly, and you're in 25 to 50 pip profit margins fairly quickly. So again, taking a bit of time to really sort of customize this so that traders will get the maximum benefit out of it. It's almost bulletproof in terms of protecting yourself, keeping it simple. Again, we're going to focus on the simplest, easiest, best trade setups. We're not going to go into every single one, but we'll build on those so that as time evolves, traders understand some of the concepts, because as each day evolves and the weekly template changes, obviously how the market trades and tries to trap traders will change as well. So looking at today, for example, in Asia, we see a small rectangle form at the bottom of the US, roll over into the beginning of the next day. We see them give us our W reversal in that first 90 minutes before the rollover. And again, I'm talking about primarily only trading in the 12 candle window, specifically in that middle hour. But there are pre-market opportunities to position ourselves in high probability, low risk trade setups, meaning that even if I'm wrong in some of these trades, I still have the opportunity to be at break even or to get out at break even before the market potentially may come back into me. But this morning we saw an example of another trend trade. Day 2, level 2, it's Tuesday, level 2. The market continued to move after coming out of a geometrical structure off the low of the day, off round numbers, moving through 50 in that first hour, and then in our second hour, giving us a nice W formation for a continuation of 50 pips. Now again, understanding the importance of timing, we're going to really focus on understanding the 15-minute rotations, the second candle that printed in that second hour. Towards the end of that first candle, we got our engulfment on a second leg structure with the trend to continue back for a move of 50 pips. Now, traders will often say, well, why don't you just use your indicators all the time? I'm just going to reinforce that these indicators can trap you in a up top near the high of the day. The market will give you an opportunity to trade into a high or into a low with indicators and reverse. Now, this is an example again where we're coiled underneath of the highs, and the whole premise I come back to each and every time is that traders caught in the wrong direction are going to have their stops at the high of the day. And when you are trading with a trend, these markets will move and move 25 to 50 pips normally into traders who are in the wrong direction. Now again, looking at London the previous day, we can see traders chasing this move in the open, getting caught up high before the market drops down and consolidates, and we see our coil occur at the London Open in that middle hour for the fast, aggressive stop hunt back into traders who are long on that move up. So again, traders who chase the move early on, the first mouse, they're in this trade 40 minutes. It's only gone 15 pips, and they're caught up high or up above the numbers. Even if they traded the engulfment into the session, they are now underwater when the London market opens up. We see the fast vertical move stopping traders out. They're not coming back up into this area. This is an example of a trade where you can position yourself with a size and also scale up in size and control your risk. So these are the types of opportunities I'm looking for. You're in the market for a very short period of time. You're looking at 50, 75 pips, and you're done. Come back the next session. And again, we'll talk later about the gap time trades pre-market. But for now, I'm mainly focusing on these simple coil squeezes on the 1 minute, aligning ourselves with the other 15-minute bias that we have in place. So hopefully you're going to get value from the videos. Traders, again, welcome back. Thanks for all your questions, concerns, and comments. Thanks for having me back. And again, my intent is to provide you with the best material possible to help your trading not only as simple as possible, but as lucrative as possible in terms of you getting value from these videos. So stay disciplined, stay focused. Thanks for all your patience. Welcome back. Have a great day, and may the markets go well.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.